It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be looking at cup and handle chart pattern formations, a bullish continuation pattern. We'll see exactly how you can spot these patterns, when to buy and when to sell. Without further ado, let's begin. Take a look at this chart. What do you see? Imagine you own this stock. Would you sell it? Would you hold it? Would you buy more? Here I've added in some support and resistance lines. You should be able to see the multiple touches on these lines and how the middle line sometimes works as support, sometimes works as resistance. Now, given that the stock had recently bounced off support and then broke above its resistance line, it may look like it's staging a full-on breakout. However, that last candlestick is a Doji, which is a reversal sign. The fact that the stock was in an uptrend indicates that it may be reversing into a downtrend. That Doji tells us that the stock opened much higher than the previous close, shot higher yet intraday, but then closed at the same price it opened. Is the stock we're looking at here prepared for a big decline? Here I've expanded the chart for almost a year beyond the final candlestick on the last chart. It's the same stock, same chart, we just expanded it out. That Doji looked like a reversal signal, but it clearly wasn't. Would you have sold, or worse yet, gone short on that Doji? Or would you have reasoned that the stock was breaking out, trading entirely above its old resistance line? But actually, the stock traded entirely above its resistance line once before, but then reversed. No, the Doji wasn't perfect, but reversal made at least as much sense as a breakout, didn't it? It did based on those two factors, but what if we're missing something that's right in front of our eyes? Charts tell us a story, but maybe we aren't listening right. Let's take a better look, a deeper listen. On this chart, our original chart, we're looking at Jabil Circuit, ticker JBL, from April 8, 1999 to November 4, 1999. Here I've expanded the end date to September 8, 2000, letting us know what JBL did coming out of that Doji. Okay, but how about we take a look back at what JBL was doing before April 8, 1999? Perhaps there's vital information contained in those candlesticks. This chart goes back to January 1, 1999, and takes us all the way to our November 4 Doji. Is that Doji a reversal? Not once you realize that JBL is in a cup and handle formation. A cup and handle isn't a reversal pattern, but a continuation pattern. It features a U-shaped cup, which indicates a soft reversal. A sharp reversal would create a V, not a U. Each edge of the cup is created by peaks. These peaks can be connected to create a lid. And after the second peak creates the right side of the cup, the stock rally typically loses steam and creates the handle. We'll look at all this on the next slide. Here we see the left side of the cup, beginning with the huge spike in volume on June 16. From there, the stock generally enters a bearish trend, and although it does stage a failed recovery, volume remains very light, until it picks up when JBL forms the bottom of the cup, the trough, the lowest point. This pickup in volume is very significant. From there, the stock has a gentle recovery and fairly light volume, all the way up until its second peak, completing the cup. Here, the stock finds resistance. Sellers who've gone through this entire roller coaster ride over the course of a couple months, and they're just tired of the action. So they sell, and this creates the handle. Now that we know what the stock has been through, that Doji gives us a lot less concern. A Doji is a one-day event after all, and a cup and handle is a multi-month trend. The longer the trend, the stronger. If we knew this was a cup and handle, we would have known to buy on that Doji, not to sell. Knowing what you know now, you could have been confident to buy at $23.79, and in less than a year, you could have made 140% profit. All it takes is the dedication and commitment to learning charts, the language of economics, supply and demand. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.